What is up, everybody? It is Monday, July 11th, around 8:06 p.m. Eastern Time. It's time for the market analysis video. So it was an interesting day. We went significantly higher on Friday and then continued into all-time high territory today on Monday, and then sold off at the close. So pretty interesting. Still, the initial pop was off of much higher than expected jobs number, and it continued here on Monday before selling off into the close. Overall, very light volume, especially for a Monday, so it will be interesting to see if sellers come into the market at these levels, even though we did approach all-time highs and clear several resistance areas. We're in that kind of little bit of uncharted waters here from the near past. With that being said, it's an interesting time for the market to have a rally if it's going to continue, a sustained rally. This is July. Generally, it's a time of more choppy trading on lower volume. Now, this is an election year, and so I would expect election dollars to be going into the economy as the campaigns heat up. However, I'm not sure if that would be a motivation or enough of a boost to propel the S&P 500 higher. The jobs number is kind of an interesting situation because we're kind of in this no man's land of we don't want a rate hike, or a rate hike is perceived to be negative for the market, and yet the economic indicators, if they're bad, obviously, even though that would delay a rate hike, is also perceived as negative and possibly putting the economy into recession. So the fact that we get a good jobs number propelled the market higher in the near term, but whether it can keep the market higher is another story, especially if the idea of a rate hike starts to creep back in. I think right now it's still priced that rate hike will not happen, and that makes sense with the issues that are going on over in Europe. It looks like there's a significant chance of the UK falling into recession, so it'll be interesting to keep an eye on that and on Europe and how it affects the US economy, because some money is going to flow from Europe into primarily the US dollar and gold, the more that there's a risk-off sentiment. But with a risk-on, people are still going to flow out of Europe and probably into possibly the U.S. stock market. That being said, I kind of been saying in the last few videos that I expected us to reach all-time highs and then sell off, for sellers to show up and must have fall back down into this range that we've been in for a long period of time. So I wouldn't. That's my expectation, is that we would fall back down, and I would be surprised if we were to go higher here. That doesn't mean we can't, obviously. But let's take a look at gold. So gold fell today, and obviously had a nice run here, and looks like it is kind of creating a little bit of a flag here at these highs before possibly going higher. So it looks like a consolidation pullback before moving to higher prices. I think with the instability that has gone on in the forex markets, in the euro and the pound and so forth, and with this idea of global monetary easing, which is this theme that I have been talking about, and this idea of negative rates, which if they continue could become a major problem. If all the major countries have negative bond yields, that would be really uncharted water and possibly dangerous territory. That's something that really I don't think we've ever seen before, where we actually had negative bond yields on major economies, all the major economies. So that could be something potentially very dangerous. We'll see what actually materializes. But with all that being said, I think it's difficult to make a bearish case on gold from a fundamental perspective. Obviously, you can have pullbacks and consolidation periods, but I think the fundamentals are in favor of the yellow stuff. Black gold, however, continues to pull back. Pull back again today on Monday. It'll be interesting to see where it goes from here. Obviously, it's gone through a large bearish phase where it dropped from over $100 a barrel to under 45, even lower than that, and it's come back to 45. I think it was somewhere around. If my memory serves, it was near $27 a barrel, something like that. This still looks constructive, but obviously it's got a lot of work to do. I wouldn't be surprised if it goes to a 50% area of this wave. I thought it would hold the 45 level. I'm not so sure. The next level here is kind of where it's at, so we'll see if it can stall here at around 1075 on the USO and kind of catch a bounce here. But I wouldn't be surprised if it goes lower into the even the $10 range before catching a bid. However, again, I think this is the start of something constructive, but obviously there are still headwinds for oil before it makes a larger move upward, and that move would be stymied by any kind of recession or strength in the US dollar, which has been the case with the Brexit aftermath. So that's put a lot of pressure on oil. So I think that any sustained rally would be difficult at this point, and really would have to occur with a upswing in the U.S. economy and probably the stock market as a whole in general. So the financials, we'll look at some of the sectors now. The financials have gained back a little bit of momentum after crashing hard on Brexit. They've finally reached, or very closely, they've basically filled the gap here from Brexit levels. Haven't achieved this high that was on the Friday before. It'll be difficult for them to achieve higher prices in a low interest rate environment. However, the U.S. financials are the best of the worst, and so assets could be flowing from Deutsche Bank, Credit Suisse, Barclays into the Citigroup's, Bank of America's, and so that's something to watch. Along with that, let's look at some of the transportation. Obviously, they've been hit hard. Again, rallied here today. Dow theory suggests that you have to have a uptick in the transportation index, or in the transports, before you have a sustained rally. We have seen a rally off of the lows, but it looks like it could stall from here. That's my opinion. These all look like they're at levels where we could see some selling pressure. So it'll be interesting to see if we can sustain a rally from here. My thought is no. I'm looking for a downturn, a sell-off from here back to 205, and some choppy trading ahead for this month of July and August. And we'll see how that goes. This continues. Still no trades on my systems. basically chilling out for the summer months. We'll see if some pick up, but until then, God bless, good luck, great trading.